Bearish fears in corn ease a little, and USDA confirms strong soybean demand. But there's no good news for wheat, which faces a rocky winter. Hi, I'm Bryce North, Senior Editor of Farm Futures Magazine. Market analyst Paul Bergner weighs in with his take on today's USDA report on this week's edition of The Buzz. Soybeans rallied sharply on Friday, with November futures moving back above 13 bucks. Give the credit to USDA, which released its first report on production, supply, and demand in 2 months. The news was worth the wait for bean growers. While USDA raised its forecast of production by 109 million bushels to 3.258 billion, it said strong demand would limit increases in carryout at the end of the marketing year. Thanks to improving crush and exports, the government bumped up its forecast of ending stocks by only 20 million bushels to 170 million. USDA has a long history of low-balling demand that could tighten stocks even more, which helped trigger today's rally. Traders will be watching export sales data closely. Exports are off to a record start in the first 2 months of the marketing year. They'll also be looking for any signs of distress in South America. So far, conditions there look favorable. What did you glean from today's report on soybeans, Paul?
Well, Bryce, I think supplies are better, but I think we're still only a small hiccup, say in South America, from becoming pretty tight. And I think that's what the market has responded to. I think we really will have to keep an eye on these export numbers, as strong as they've been early in the year. We'll see where that goes. We've really only got about 40 million bushels left out there to work with. So there's not a lot of room there. And as you look at this market, there's still nearly 20-cent inverse January to March, and more than 20 cents from March on to July. So the market wants these beans right now. It's going to be up to producers to really sort through that and make those marketing decisions. But we don't have an awful lot of beans to work with, and I think that's where the market picked up its gains today.
It's hard to believe a billion bushel bump in carryout is bullish, but that sigh of relief coming from Chicago today was a corn market that braced for the worst headed into the USDA report. The government added 146 million bushels to its forecast of production, taking the crop to 13.989 billion bushels. But that was considered friendly because some in the trade feared a much bigger number. And thanks to stronger feed usage and export demand, the agency raised its forecast of ending stocks by only 32 million, keeping them well below 2 billion bushels, a moral victory if nothing else. After falling to a series of new 3-year lows this week, the market reversed higher on the report. And while corn carryout remains large, fuel for further gains could come from speculative hedge funds, which took a record bearish bet into last week. Paul, do you think that short covering could be the best hope for gains into the end of the year?
I do think that might be our best hope for gains into the end of the year. I think there's still maybe a low out there. I think there's still some room on the demand side, but I'm not terribly excited about anything until after the first of the year. And then we may see some pressure from some early in the year sales as folks get past that first of the year time. We saw no move on ethanol in this today in terms of demand. I think there might be some room there, and I'm still not convinced that we've gone as far as we need to on the export side. But in the meantime, we could still be selling some cash corn in the threes once we cut loose. So I think there's some room out there, maybe not in the short term.
We tried to join in the rally in corn and beans briefly after the reports came out today, but USDA failed to provide even a crumb to hungry bulls who appeared to be giving up on wheat. Futures broke a series of support levels at all 3 exchanges and may be headed towards a test of fall lows. Traders expected USDA to cut its forecast of ending stocks modestly due to strong early season export demand. Instead, carryout went up slightly to 565 million bushels. The only bright spot came in feed usage, which was stronger during the summer before new crop corn became available and cheap. Where do wheat conditions overall look good? And the only trouble spot so far on the world scene is China. Even Russia and Ukraine appeared to catch up on much of their planting after fears acreage there could be down 25 to 30%. Paul, do you see anything friendly on the horizon for wheat right now?
As far as I can see, there's absolutely nothing friendly out there for wheat. I've been waiting for this. It's carried a little bit further into the fall than I really expected it to, but not a lot of friendly news out there when we take a look at it. That feed use number seems to be positive, but when we really look back at it, it's all uh, previous use before we got to the $2.25 premium that we've got now on December Chicago wheat to December corn. So we're not going to see much feed use from here forward. We're looking at the export markets. They're going to be attracted to the lower prices, so maybe we'll get something out of that. But really, there's not a lot of hope there. The one strong hope is that maybe China does come back into this market a little bit stronger. The crop in our part of the world in the plains is in the best shape it's been in years. So I think there is some uh, good news for wheat in that the next crop looks good. Not much good news in terms of where the prices are headed right away.
Well, thanks, Paul. We'll be back next week to see if today's rally lasts with another edition of The Buzz.